Welcome to the SNB Experts Learning Platform. Today we begin our deep dive into Module 1, the IFRS Ecosystem and Architecture. Before we can master the standards, we must understand the framework that supports them. Let's begin the briefing. Our agenda is comprehensive. We will track the evolution from IAS to IFRS, identify the funding sources of the foundation, and examine the role of the IASB. We'll dismantle the structure of the framework and contrast principles-based accounting with rules-based systems. Every section is a piece of the architecture. Section 1. Evolution. The IASC was founded in 1973 by accounting bodies from 9 countries. From 1973 to 2001, we saw the issuance of 41 international accounting standards. It was a part-time, consensus-driven era, but it laid the foundation for the global language we use today. Pressure was building for a more rigorous approach. The year 2001 changed everything. The IASC restructured into the IFRS Foundation, and the IASB was established as a full-time, independent body. This wasn't just a name change, it was a total overhaul of the standard-setting process. Precision became the priority. The IASB inherited all existing standards and began issuing IFRS, starting with IFRS 1. A 3-tier governance structure was introduced, ensuring a rigorous due process. The shift from part-time committees to a full-time independent board was the tactical shift needed for global enforcement. Look at the key differences. Mandated enforcement in over 140 jurisdictions. Today, IFRS is the universal accounting language. Mandatory in the EU since 2005, and adopted or converged in major economies like Australia, Canada, and Brazil. Even the USA allows foreign issuers to file under IFRS. 140 jurisdictions and counting. This is the global standard. Understand the map to navigate the market. Moving to Section 2. Who funds this mission? Independence is paramount. To ensure the standards remain unbiased, the IFRS Foundation relies on a multi-stakeholder funding model. If you want to trust the rules, you have to know who pays for the ink. Strategy requires transparency. Funding comes from national regimes, publication revenue, accounting firms, and central banks. But remember the key safeguard. No single donor can exceed the concentration limit. This prevents any one entity from controlling the narrative. Independence is the backbone of the entire operation. It is tactical, deliberate, and secure. A 3-tier governance structure protects this independence. The monitoring board oversees the trustees, who oversee the IASB. Technical decisions are strictly the domain of the board. With concentration limits and public due process, the architecture is designed to be tamper-proof. Information integrity is the final goal. No hidden agendas. Section 3 focuses on the IASB itself. Up to 14 members, selected for geographic balance and professional diversity. Their mandate is to develop high-quality, understandable, and enforceable standards. But it's the process they follow that defines their success. Let's dismantle the due process. Strategy is in the steps. From the research phase to the final standard, every step involves field testing and global outreach. A supermajority is required for any approval. This ensures the standards are not just written, but tested in the real world. The Accounting Standards Advisory Forum provides the structured input. Nothing is left to chance in this intelligence cycle. Results are verified. Section 4. The structure of the IFRS conceptual framework. Think of it as the backbone. It's not a standard itself, but it guides the IASB in developing new rules and helps you, the preparer, when no specific standard applies. It is the intellectual foundation of everything we report. Understand the base to control the peak. The 2018 revised framework is more comprehensive than ever. It focuses on primary users, investors, lenders, and creditors. We look for fundamental characteristics, relevance, and faithful representation. Without these, the financial dossier is worthless. It's about predictive value and neutral depiction. Accurate intel is the objective. Enhancing characteristics like comparability and verifiability make the information useful over time. And we must define our elements clearly: assets, liabilities, equity, income, and expenses. These are the fundamental building blocks of the financial position. If you can't define it, you can't report it. Precision in definitions is the mark of a pro. Then there is measurement. From historical cost to current value measures like fair value and value in use. IFRS 13 governs this territory. Knowing which measurement base to apply is a tactical decision that determines the final outcome of your reporting. Intelligence must be measured accurately to be actionable. Strategy is in the numbers. Section 5. The IFRS hierarchy. IAS 8 defines the priority. When you face an ambiguous reporting problem, you need to know which guidance takes precedence. It's a chain of command for accounting standards. IFRS, IAS, IFRIC, and SIC. Know the order to maintain control. Tactical reporting starts with the hierarchy. Priority 1. The specific standard. If that's silent, look to IFRIC and SIC interpretations. The conceptual framework is applied by analogy when no specific guidance exists. Even other bodies' literature like US GAAP can be referenced, provided it doesn't conflict. This is your reporting compass. Follow it to secure the audit trail. No deviations permitted. IAS and IFRS standards carry equal legal weight. It's about chronology, not authority. Newer IFRS replace older IAS, but many legacy standards remain in force. And don't forget the IFRIC interpretations. They address ambiguities not anticipated when the standards were written and carry mandatory authority. Mandatory clarifications are your tactical advantage. Precision is required. Section 6. Principles-based versus rules-based accounting. This is the core philosophy of IFRS. We don't just follow a checklist, we apply informed professional judgment. It places a higher burden on you, the preparer, but it captures the economic reality of the transaction. Strategy is about substance over form. Defend your judgment. IFRS is concise, encouraging analogy and judgment. Contrast that with US GAAP, which is voluminous and detailed with bright line thresholds. Our approach uses broad principles. For example, IFRS 16 uses a control-based definition for leases rather than simple percentage tests. This flexibility is your tactical edge. Manage the principles, don't just follow rules. Accuracy is in the judgment. The implications are clear. A higher burden of judgment, but a better capture of reality. We account for economic substance, not just legal form. And when no standard applies, we use the framework by analogy. Check the standard, check interpretations, apply the framework, and reference other literature. Disclose your judgments. Transparency is your mission. Secure the reporting mission. Process complete. Let's recap. The IASB sets the standards, protected by a rigorous due process and independent funding. The 2018 conceptual framework is our foundation. We use a hierarchical body of standards and interpretations, all driven by a principles-based approach. You are now oriented in the IFRS architecture. The briefing is almost complete. Mission success is in sight. Mastering this architecture is your first step. IFRS has become the global accounting language, mandatory in 140 jurisdictions. You now understand where it comes from, who wrote it, and how it is structured. Use this intelligence to build more transparent and more professional reports. Precision is your legacy in global finance. Mission accomplished. Transitioning to final review. Proceed. Before you move to the next phase, challenge yourself with these review questions. Explain the significance of the 2001 restructuring. Respond to claims of bias. Evaluate the tension in qualitative characteristics. Your IFRS journey has officially begun. Module 1 is complete. Next mission, first-time adoption. I'll see you in Module 2. Prepare for transition. Briefing dismissed. Thank you for your service to clarity. Goodbye.